everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of our recently closed trade ID number 452. As you can see, this was on MTB, which is a bank stock. We were looking for directionally based trades that, in this choppy market, had the opportunity of moving higher. Financials make sense, so if you're a person that likes fundamentals, you had the fundamentals behind it because interest rates were moving to the upside. The exact trade was a long call within our impulse strategy or directional based strategy, and specifically it was a Jan 170 call. Now when the entry alert was sent out, you can see from the pattern that it had a really nice setup. In addition to a 5-wave impulse pattern to the upside, it also had a zigzag within the impulse pattern. That's one of my favorite directional patterns, when you have a zigzag within the impulse pattern. It's kind of two Elliott wave patterns giving you the same idea, and in this case both of the target prices were kind of in the same area, above 170. In addition, if you look at the DMI, which is one of our favorite supporting indicators, confirming indicators if you will, we have a number of indicators that we utilize to support the Elliott wave pattern, and the DMI was showing that not only was there some strength to this upward move, but it was likely to continue. That's what you want to see out of the DMI. Now the stock did move to the upside, but in the meantime, as you can see, we went through a corrective pattern. We went through a triangle, an ascending triangle. That happens in Elliott wave. What is Elliott wave? It's a system of impulses and corrections. Well, when it goes through a corrective pattern, that's where you have to exercise some patience. We're long only on our options, so when we buy a call option, the positive is you have a fixed amount of risk. You can't lose more than what you paid. The negative is time value works against you, so when the stock goes sideways for a while, that time value starts to eat into it. We'll talk more about that in a second. But we broke out of the triangle, and not only did we break out of the triangle, but we went exactly to that where that wave 5 targeted price was forecast within that tap box right there above 170. Now, coming back and talking about the fact that a little extra time went by, you can see there were 55 days in this trade. We kind of like to keep our directional trades more on the 3 to 4 week type of a time frame. However, as long as the pattern does not become disqualified, we're willing to give it a little extra time. But when you look at this mark-to-market graph here, it shows that at one point in time, this position was at a 91% loss. Be honest, would you have had the patience or the stomach, if you will, to absorb a 91% loss? If you have a system where you just automatically arbitrarily exited a 50% loss, you would have missed out on a 94% gain, which is what we ended up making on this position. So at Elliott Wave Options, our methodology is we trust the pattern. As long as the pattern is still intact and doesn't become disqualified, we'll give it a little extra leeway. That's the key there. Now if the pattern becomes disqualified, you exit. You take a loss then and move on. But just having a system of X number of percentage profit or X percent loss, I don't think in the long run makes a lot of sense, and this is a good example of that. In addition, I posted a comment on our website, which was tagged to this alert, explaining what I just went through to you. So I hope you found that informative. I look forward to talking to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.